Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Okay, we've got silver here on the daily scale, and we also got the euro versus US dollar represented here with a black line that you see. The black line follows more or less the movements in silver. We already studied this relationship before. If you remember, the reason why I bring it up here is to emphasize the danger for precious metals investors who are ignoring the tight relationship that exists between the commodities and the currencies. Many of the insights that you can find here will go completely unnoticed if you don't spend time searching and studying the relationship. And it's a shame, because you know that we have worked quite a bit on the idea that we have basically a big leg down in the euro. We established that we have 1, we have 2, and we are now looking for an extended C down. Yes, with a 1, 2, 3, 4, etc. In a nutshell, the euro most likely did not finish the business of going down. It'll probably go down in a big way for months. And it's not very difficult to see what is the likelihood of silver rising in the face of very strong DX and very weak euro. If you have such reasonably clear tight correlation, it'll be really not prudent to totally ignore the projection that is coming out of the euro, US dollar, pound, US dollar, yes, all these relationships there. And of course, there should not forget the US dollar, Japanese yen, that is likely going to look up now, and that is going to bolster the negative forces that are pulling the precious metals down. So what do we do with silver here? We have a case of one interpretation where we were taking the movement down in silver as an ABC that may have reached an end. You can see clearly that it went to the other side of this channel. I do think that silver will rally now. Yeah, I think it's going to rally in the same way that I think that the pound and the euro are going to rally against the US dollar. I could be wrong, but I do see a good case here for a pause at the very least in the decline in silver. Now I could be wrong, and silver might take off from here and will establish this as a valid big ABC, and we will see it flirting with new highs at around 30, etc. I'm not rushing with this forecast at this point. I would suggest that we take it one step at a time. I do see this is a critical level for silver that comes at around 25. Okay, if silver is able in the next 10 days to climb above 25 and build a base around here, then there is a fighting chance that it is going to turn up and go quite a bit higher. Even a base above 25 will not guarantee that silver is ready to blast above 30, okay? That is sorry, that is the observation I want to share with you right now. I'm going to take out now the euro because I hope you got the point here. And we're going to clean this. And essentially we can discuss a 1, 2, 1, 2, 3, 4, 3, 4, 5 complete. Okay, that's it. That's a 5-wave run. Went straight to the other side. Time for a correction. Yes, I think it's going to rally. How far, as I said, I don't know. But time is now to look up. Certainly I wouldn't sell silver short now. Absolutely not. Even if it goes down a bit, I can't see it plunging in a big way to justify putting a big short position now. No, absolutely not. Okay, let's go to the 60 minutes. And you can see already it's making efforts to come back. And I had this as a 3-4. Yeah, we discussed that. He gave us the plunge. I think that it actually ended up here. If I'm right, that's a 1, 2, 3, 4, 5 failure. Or it might have ended here, in which case the rally, the corrective rally started from this spot. Either way, I think a short term, I would say for the next week or so, yeah, next week, next 2 weeks perhaps, yes, we will see silver stable to up. Now I'm going to show you two alternatives here in the case of gold. One is the one that I suppose you are quite familiar with by now. That is that this is a 1, 2. That 3, we are locked in a very big triangle, of which we probably have seen an A, B, C. We don't know if the D is done. I don't think so. But it could be the D is done, the E is done, it's ready to fly. Who knows? Yeah, perhaps, of course. That will be clarified by Mr. Market in due course. The idea is that right now I think we do have a bottom. We have a temporary bottom. I'm going to jump to the 2-hour scale. And I took this as a 5-wave run and I called it an A. The fact that it came down in what looks like an okay 5 waves is not good news. It's not good news, because if this is 5 waves read correctly, it means that it's probably not going back there. So that's already for you a critical level to watch the 1835. I would say if gold is able to sit above 1810, then there is a fighting chance it's going to exceed this level, in which case I have to relabel the price action that you see here. Short term, yes, gold is probably heading higher, but longer term I would caution you very much not to jump on the bandwagon of this rally that may end up being a trap. I'm going to show you why. We already discussed the idea that silver was following fairly closely the action in the euro, and there is no reason why gold would not do the same thing. And I'm going to show you in the case of GLD right here. That's GLD. That's the weekly scale of GLD. GLD is standing for that's the symbol of the gold ETF. Yeah, it's the same like gold. It's just that it's you can see instead of 1,600 you have 160 traded in dollars, of course. And the big idea is that gold is not destined to go up. This is not a fourth wave. No, this is not a fourth wave. The euro is going to head lower for months, and so will gold and silver. Yes, we're not talking about a complete meltdown, but they will have tough time. They will struggle. That is the idea in this very, very lengthy triangle, where I think we have seen a top registered right here in wait a minute, this was 2011. Yes, 2011, August 2011, and since then the entire price action is basically part of a giant triangle, and that is taken as an A. That's a B, and we are now witnessing the progress of the C wave that could see GLD coming back to the level of, let's say, corresponding to 1,200 in gold, maybe even 1,100. I don't think it's going to break 1,000. No, the idea of this triangle, we do have support here. We have pretty massive support, zone of support around here. Do you see this zone of support? So I think if it does come down, it's not going to go into sinking through that. No, I don't see that happening. But it's going to chew up a lot of time. Yes, I'm going to go to the daily, and that is the wave count that I suspect could be in play here. And I'll tell you where I am probably wrong. I mean, what needs to happen to show that this is really a wrong interpretation? This is an A, that's an A, that's a B, that's a C, that's a D, E, that's a B. And now we're looking at the big C coming down. Now that could be just wave 1, or could be just wave 1 off 1. Do you understand? And the rally, in essence, should keep it in a tight range. The bounce here, the corrective bounce, should keep it in a tight range here. And let's say in 2 weeks, we start looking down. Seriously, it's going to start breaking 160. And eventually going through 156. And that should tell you that we are almost certainly on the right track of looking for a big C to unfold. Alternatively, it is a false wave, and it is destined to fly, and it is destined to fly above 1,000, maybe even above 2,000. That is the first sign that my interpretation is wrong. That comes at 1,780, 1,790. Okay, that is the line you want to watch on the upside. Okay, let's put it in red. And this is the one that you want to watch on the downside. It's very important. Yes, this range is absolutely critical. I would say that breaking 160 is already, after a 2-week feeble bounce, it's already a good sign that we are probably on the right track. Yeah, if it is strong and it is destined to go a lot higher, it's probably going to jump fairly vigorously above 172, which is corresponding to 1,720. We will see, but I suggest that you give this ABC structure a lot of thought. You take this into account. Do not buy blindly gold stocks. Gold stocks, silver stocks can get stuck in a struggle for their life for the next year or two. There is no guarantee in the markets. My website, the homepage, is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users. And that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here. Chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still. The information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books, and of course If you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very, very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you great trading week. Bye now.